The best thing to do during these times is definitely to be positive, and we're definitely trying to be positive as well, and finding alternatives to what you used to do. Hello everyone, this is Ronan Blue, just taking my daily walk here today. And today's topic would be on how the pandemic has affected our personal finance. So this year in 2020 hasn't really been the best years for all of us actually, especially when this pandemic has hit. And a lot of us are forced to change our lifestyles, definitely. You know, majority of us are locked in our homes, whether you're working or a large percentage of us are actually unemployed as well. There's actually been some kind of data that came out from the US Federal Reserve saying that the unemployment rate has actually hit the highest record since post World War II, of over 20 million jobs lost in the United States, and that's just the United States alone. And in combination throughout the whole entire world, it's really hard to say what the percentage would be. But it's definitely been the roughest year for all of us. You know, not only are we in lockdown and we're trapped within our homes, but we don't have movies to watch because that's closed down, and television shows to watch either. Anime for some people, and there's not a lot to do. And sports, yeah, I forgot about sports. But all of it is really adapting to the situations, and it's quite interesting. Everything is being forced to adapt to the new world, as they say. So not only are all those things that evolve around our lifestyle has to adapt, but also personal finance has to adapt as well. So I'd like to talk about some of those points today and how our personal finance has been, all of ours, not just ours, but everyone's personal finance has evolved or is adapting to this new world. So I'd like to first talk about the millennials. The reason being is because the millennials are probably the hardest hit during this pandemic. The reason being is because they had to actually live through two different economic collapses. The first one being the Lehman shock back in 2008 with those mortgage-backed securities defaulting, and now the pandemic here with you know, the whole world being in lockdown. So it hasn't really been the best conditions for millennials, and you know, it costs a lot of money now for maintaining that lifestyle of the American dream today. And I believe, in my opinion, the American dream has the definition of it is actually very much changing, and it's inevitable in these economic conditions. I'm not sure for how long, but of course the governments of the world, the central banking systems, are flooding the system with free money using quantitative easing, and artificially propping up the economies in the world to jumpstart them. But obviously you can see by just looking at the stock market that there's a disconnect, right? The economy is doing so poorly, yet the stock market seems to still be floating, and people are rushing in, realizing this. And there's also some you know, assets that are going up as well in these conditions. And you'll see gold and silver as an example, and cryptocurrencies as well, rising in value. against the US dollar. So you can see that the US dollar there is weakening, and a lot of people are actually taking advantage of the situation. And well, everyone's trying to survive and try and adapt as quickly as possible, I suppose, because everything moves so quickly, lightning fast. And if you're not on your toes, you know, or planted, or have your feet planted right, then you might miss the opportunities that are out there right now for you to secure your financial future. Because I believe there will be recovery in the end. I think the majority of us know there will be recovery, but as to when and as to how to protect yourself is a different matter. And we actually survived many different crashes in the past as well. And throughout the whole time we had that, you know, buy and hold strategy that actually worked out for us. Buy and hold. Some people have actually sold. And to me, I just can't really imagine why they would sell, you know. Well, from my perspective anyways, just because we have a pretty good portfolio that is very much defensive, and it works well in these recessionary periods. So, but for the millennials at this time, you know, the pay isn't that great. Millennials also aren't owning as many homes, and the rental prices are extremely high as well. And it's really hard to really live the lifestyle the two previous generations have had the luxury of living. So personal finance becomes extremely important now, especially for the millennials, because of these unseen, you know, economic conditions that are, I mean unseen as in it's unpredictable. You know, who knows what's going to happen in the next decade or so. But what we did find in the previous crash, the Lehman shock of 2008, was that the governments did everything and anything to protect the existing economy. So what ended up happening was, yes, there's an initial decline of a couple of years, but then after that, around 2-year period, you essentially saw a 10-year bull run in the markets. So I'm assuming that that's going to be what the case will be for us. Maybe the next 10 years will be propped up again. I'm just making assumptions. I'm not a professional or of any sort. It's just a random guy talking about the potential future of our economy. But I believe maybe some of the changes that will occur will be that maybe a lot of the world governments will move slowly away from the US dollar and maybe emphasize more of digital currency as well. So just because for digital currency you don't have to touch physical money anymore. I mean, essentially our market is already kind of digital currency based anyways. But going back to personal finance, sorry I keep straying off of topic here, but you know, if you look at how personal finance is evolving through all generations right now, the assumption before was that females usually tend to spend a lot more on consumerism and materialism than males. But a recent study actually showed that males were spending more since this pandemic. I guess they've been at home and, you know, and I guess they've been working on maintaining their homes, or perhaps, you know, spending more on their hobbies, since they don't have much to do right now. You can't go out. too far anyways, where there's a lot of people, and if you do, it's kind of a pain in the butt because of social distancing and all that. So, but studies also showed that another change that has been occurring is that brokerage accounts are being created at record numbers. Like there's a backlog of people wanting account approvals to start trading or investing. So yeah, millennials and also Generation Z or X, I don't even know what those levels are. Maybe somebody could explain it to me, but they're actually investing, right? Because they realize, you know, being in lockdown, you're kind of in a situation where you're forced to save. So what do you do with those excess funds? It's your opportunity to fund your retirement fund, or maybe even put more towards your mortgage, or maybe even pay off your car loan. There's a lot of stories like that. You know, I track Instagram, you know, and I follow a number of different financial gurus, seeing what they're doing and just keeping up with the latest news. And I see a lot of young people, they're, you know, paying their debts down, because that's one thing you really want to focus on. You want to focus on getting rid of your debts. And another thing that has changed is, well, a lot of people are forced to work from home. So they no longer have to worry about paying for gasoline or, you know, those bus tickets or Uber or, you know, the train tickets. So they're saving a lot from that perspective as well. So they're getting a lot of extra money. And in some ways, a lot of people are happy about that, you know. But you know, this is what I've been talking about over all of these years, that you'll find a certain amount of pleasure, I guess, in being able to save, or being disciplined and saving as much as possible towards your retirement fund. There's a certain pleasure to it when you put aside some of that those wants that you have for materialism, and you start saving a bundle and you invest it, and you'll see, you know, there's better usage for your savings in the longer term. And also you'll notice that there's no business travel anymore, well, obviously, but a lot of people are taking advantage of technologies such as Zoom, so they can conduct their business meetings from there, and it saves a lot for the company and the individual as well. And also I would say that you know, having to adjust, human beings are so good at adjusting to their environment. Other opportunities come up. You can never say that the end of the world is happening, you know, especially when it comes to us, because we always have the ability to adapt to our conditions. And it's shown time and time again throughout history that humans are always able to adapt to their conditions. But yeah, a lot of people who refuse to adapt to the new changes, you know, they kind of play the blaming game too. I mean, I can understand that as well, because I blame the pandemic on us not being able to travel anymore. But we're adapting this situation. We just have to make sure to find, you know, alternatives to make us happy. And having to take these nature walks, as simple as it is, makes us super happy. So until we start traveling again in the future. So but the best thing to do during these times is definitely to be positive, and we're definitely trying to be positive as well, and finding alternatives to what you used to do, those alternatives that could potentially make you happy, that you never really cared to really discover in the past. So it's actually exciting, you know, because it forces you to see different perspectives, and it forces you to kind of use your imagination, I guess, in trying to find your interests, I guess. And obviously you're going to have a lot more money. It looks as though the savings rate has gone up. The average savings rate previously was about 6.5% per month, but now I believe it's in the 20 percentile. I mean, it's 20% or more for the average person now. So that's a lot of savings. And we're entering a deflationary environment where the essential items are going up in price, inflation wise, but the non-essential things, materialism, is going the opposite direction. They're getting cheaper because more people are choosing not to spend on consumerism or materialism. So I think a lot of people have that concept now that I've actually always spoken of saving and investing. And that really worked out for us in the longer term. And like I said, we survived a couple of crashes in the past there. And having invested for the last 15-year period, I would say that that's probably one of the best things you can do. Save and invest and stay out of debt and live below your means and spend less on materialism and use your imagination to fill up the gaps that make you unhappy. You might feel a little bit deprived here and there, but the motivation is to be creative and find other solutions. There's a whole bunch of things out there that you can adapt to. Well, I think I end my vlog here today. Tell me what you think of all of the points I've discussed in this vlog on how the pandemic has affected your personal finance in the comment section below. If you like this vlog, please don't forget to give me a like, subscribe if you haven't already, and hit that notification bell for more of my coming content here. Thank you for watching my vlog. Be free, gain wealth, and travel far.